The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 2nd, terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to give us a call. Dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in the Tiger's Den, just as Mr. Z and Pete D have done, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, you got the Dow down 31 points. Trade on at 25,303. Other than that, the major indices are green, such as the S&P up 10, NASDAQ up 81, Russell up 10, semis are up 13, trannies are up 54 points. Spot volatility index is trading down right now. It's trading down at 1265, so back below its 50-day exponential moving average. Gold's off $6, silver's down 5 cents, light sweet crude up $1.52. Leading the charge, the upside dollar-wise, it's Tesla, $38. Dexcom up 28. Amazon up 25. Regeneron Pharmaceuticals, 23. LCI Industries up 11. To the downside, it is Teleflex. That's down $18 or 7%. Willis Towers down $10. Mazor Robotics down 10. Wynn Resorts off about 10. So we certainly have things to look at. I see need to update some of these futures contracts out here. That's neither here nor there. Let's go to our first question. First question was whether we could go take a look at Las Vegas Sands. And we absolutely can. Yeah, what a great, fun hotel. Well, good company. Hey, let's just go see what stockholders think about Las Vegas Sands. Hey, come on, Steve-O. In order to take a look at what Las Vegas Sands is doing, first we take a look at our 3 time frame charts out here. And what we know is that Las Vegas Sands created a brand new TAS daily profile today. It was today or yesterday. Let me see. When is it? Yesterday. Yesterday, that didn't hold up really well, meaning that when these profiles form, what they provide us with are levels of support, where it is that the party is at, meaning both buyers and sellers believe there's fair value, and where the actual just sellers are hanging out, resistance levels out here. The case of Las Vegas Sands crushed the bottom of the box. That means crushed through support. We're trading below support on a weekly basis. We are trading below support on a monthly basis. The month just began, obviously. So that's not helping us a whole lot. We've got to go to Stevie's other system and try to figure out what's Las Vegas Sands doing. So if we're looking for a buy, what we see is that price has been stretched to the downside. Stevie's RMI indicator is flashing. But today is not the day. We need some type of bullish reversal signal, and it doesn't look like today is going to be the day. Maybe it's tomorrow. Doesn't look like it, but I don't know. We got to wait to see how today's candle completes and finishes, and then what tomorrow's candle looks like. So in the case of Las Vegas Sands, the only pattern right now that I can draw, should I do it here or do it there? Let's do it over here, only because it just shows up maybe a little bit better on your screen, and we can take a look at the volume matrix out there. And that's the A to B equals CD to the downside. So your A point out here, the trading day of June 8th, your B point down here on July 2nd, Your C point, this retracement into July 24th. The B point, that's again the day of July 2nd. Volume there of 9 million shares. Passed yesterday with 5.5 million shares. So lighter volume, schmolium out here. Volume just one aspect of what it is that we look at. The price projection, just for the one-to-one level, takes you to about 64.72. Just looking back to see, do we have anything at the 64.72 level? We have a slight breakout, small breakout, only 4.6 million shares. That gap to the upside on November 7th. But it looks like Las Vegas Sands is headed lower. Not a buy at this time, but it looks like it's trying to set up to be one. So continue watching that. We also had a request to go take a look at Sledgehammer, S-E-D-G, and that's a great tune, the Sledgehammer tune out there. Who's that? Peter Gabriel, right, if I'm correct out there. So if we take a look at this Solar Edge Technologies, looks pretty nice so far. You're running up into resistance out here. So resistance is the top of the monthly profile, and that's going to be 58.76. You're trading at 58.27. The top of the weekly box is 60.78. You're above the daily box out here. Let's take a look at today's volume. And then we'll go take a look at Stevie's other charts out here. But if we look at today's volume, you've got 675,000 shares. So we know this is sort of a thinly traded stock out here. It's trying to take on its B point of a possible A to B equals CD to the upside. Volume-wise, there's 1.2 million shares. We're a little bit more than halfway through the trading session, so it's close. Don't know if it will be a cigar or not. But if we pull over Stevie's other tools out here, we're going to see that what Sedgwick did when it made its high, it used that Stevie Rhodes momentum indicator signal. When it made its low, it made it with that Stevie Rhodes momentum indicator signal. Did that back on June 29th. That was actually the buy. Why was that the buy? Or the buy signal? Because you got the confirmation, the bullish engulfing. Price closes over Stevie's red line. Didn't close over the box, so your other buy would have been the bottom of the box. That took place on July the 3rd. While most people were partying, so too were the shareholders inside of Sedge. Now, if we go take a look at the wave count to the upside just to see where it is that we're at, looks like in wave number 5, this could easily be an A to B equals CD to the upside. So my question to you, Pete D, are you in it? Are you in it to win it? It looks like it may have a price projection in the 63.50, 66.90 level because retracement, only about a 50% retracement out there. So looks pretty good. You know, at the bottom, though, was back there in, you bought it today, okay. The real bottom was back here in the early July level area out here. You know, look, I'll get it out. I haven't found a pattern more powerful than the Rhodes Momentum Indicator signal out there. One that is more consistent at being able to help us identify when a market is making a topping pattern and when it's making a bottoming pattern out there. So, hey, great, you know, but the real buy would have been back here. And had you had access to that, understood that tool. And if you'd like to, folks, just come on over, sign up for the Mastering Probability newsletter service. You'll get access to the workshop that teaches you this pattern out there, as well as you're going to get access. Hey, there's another workshop I'm going to do. This one's free for everybody. So I'm having an open house. Yeah, an open house. And I want you to come join us. It's real simple. All you have to do is give us your name and your email address on the homepage of TFNN.com. It's next Tuesday at 5 p.m. We'll be right back. Strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no-questions-asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Dow's off 25, S&P's up 11 points. Now, this is a question I'll answer by email as well, but just in case Robert B., who's a subscriber, wrote in, and he asked this question in case you're listening live, Robert. So last week you mentioned that we should be using the 50-day exponential moving average when evaluating the VIX and different indices. If I said and different indices, my apologies. I never would have intended to say that. Only the VIX. It's the only thing I use the 50-day exponential moving average on. So, and if I said that on the radio and somebody else heard that, we need to correct that right away, right here, right now. So we just did. So I believe you also said that it's beneficial to use the Bollinger Band set to 50 days and one standard deviation for evaluating the VIX. I did say that. That is another tool that I like to use out there. Should I also be using the Bollinger Band settings when evaluating indices? I don't use them. I'm not saying there's anything wrong with Bollinger Bands. I don't have the, although I tried to figure it out, I don't have the, I haven't found the consistent system where I can use those Bollinger Bands in order to be able to evaluate what a market is doing out there. And so if you're going to use Bollinger Bands on indices, what I would probably do is go back to the 22 level. 20-day, we're a 2 standard deviation from that center point. But I can't, if I could find an edge in using them other than the spot volatility index, I'd be sharing that with you here. I'm not saying there's not an edge. I'm saying I couldn't find the edge out there. Oftentimes I'm blind. So no, so as a subscriber, and I'm going to write back and say, no, I can't suggest that you use those because then I can't really guide you as to, hey, here's what to look for to be able to identify a top or a bottom out there. But why did I say the 50-day exponential moving average with regard to the VIX index, which we'll take a look at right now? Because my experience, and you go back and back test this, which I did I did electronically, and that's how I came up with the 50-day level working so well. When the spot volatility index is below the 50-day exponential moving average, a couple different interpretations. Number one, it tells us that there's lots of liquidity in the marketplace, plenty of liquidity to go ahead and drive prices up. We're seeing that today. Additionally, it also means that the S&P 500 is going to do one of two things. Typically, it's going to move sideways or move higher. Now, when you found an actual bottom and the VIX finds the bottom and it's going to go ahead and spike up, continue moving higher, well, then at that stage, you're going to see the S&P move low. I'm giving you the generality. When the spot volatility index is up above the 50-day exponential moving average, as an example, for an extended period of time, back here on November the 12th, what we saw was a spot vol. It was really the 16th. November 16th, you had the 50-day at 1021, the spot volatility at 1166. What you can see, though, is the S&P 500 continued to move higher. That's the top panel of our screen out there. So we call that as a divergence. So where you've got the spot volatility index above the 50-day, you've got price in the S&P 500 moving higher. On a closing base, we had a rising spot volatility index. Those things lead to a really bad hangover. Doesn't really tell us, where that hangover is going to go to, but they basically nearly always, I can't say always because I haven't looked at every single one of them, but if you go back and you take a look at it, you're going to say, I get why Steve-O looks at that 50-day exponential moving average when it comes to the spot volatility index. So, and here's another example. Now, in this case here, price didn't move above the 50-day, but you still had a rising bottom spot volatility index. Robert Beck began June 6th, and you can see that price didn't start moving down to about June 15th. So you had a S&P moving higher. You had a higher bottoms. It's the same pattern that we have in place right now. That's got to make you say, something to think about. Now, price is below the 50-day level, 1371. Earlier this morning, price was above that area. But at this stage here, it's below that level. But is this the total? Is this the hangover of price moving higher and having a rising bottoms in the VIX? Well, that's something for you and I. That's something that we must answer. Now, with regard to the 51 Bollinger Band reading, let me just go ahead and put that on here. And and here's the 50-to-1 setting. These are the red lines. Typically, what you will find is that the S&P begins to make tops when the spot volatility index gets into that above the 50-to-1 level. And you can see you got a signal back here on March 23rd. The actual, I said tops, bottoms when it's above that level, tops when it's below. So let me rewind there. So I'm looking at the upper Bollinger Band line, that 50-to-1. When the spot volatility index gets above the 50-day level, typically of the Bollinger Band, which in this case here it did on March 23rd, it's a sign of an impending bottom. Can't use it as necessarily a timing tool. You've got to use some of the other tools that certainly you and I and our other subscribers go ahead and use out there. But it's a really good tool to kind of let you know what's going on. The same opposite takes place with regard to topping patterns when this gets below the 50-day. If you had to ask me which one am I going to use, I'm going to use the 50-day exponential moving average and the spot volatility index. Look for divergent patterns out there. This one will set you straight. And you go back into 2007, 2008, and you'll see it has nothing to do with the value of the calculation of the spot volatility index. Nothing. That's why when it frustrates the you-know-what out of me, when the spot volatility index is down like 13 or it's down at 8 or 9, and people will say, there's no fear in the marketplace. You just can't trade off of that stuff. But you can trade off of the 50-day and wherever the spot volatility index. So, okay, I've worn out that carpet. But as a subscriber, I had to be very thorough there, and I apparently had misspoken, so I'm just trying to correct that. So that, I said, is this really the hangover in the S&P 500? Is it really? I don't know. Here's a problem. Here's another problem out here. Right now, today, even though the $1 trillion party is on, I did not get my baseball cap for that. I wish I did. as we speak right now, as of 1:25 in the afternoon, we have more issues on a daily basis in the NDX 100 trading below the bottom of their box, 29 of them, versus the number of issues trading above the top of their box, 26. It's not like by an overwhelming margin out there, but you do have that crossover. And whenever you've had that crossover in the past, has it meant anything? Well, here's a crossover back on February 1st. So if we come back and we take a look at February 1st, I'll just keep on the S&P out here. But if I come back and take a look at February 1st, here's February 1st for the S&P. There was that crossover, that bearish crossover inside the Index 100. Yeah, it seems like it kind of meant something. Let's take a look at the one after that. The one after that took place on March 19th. So let's come back. Let's take a look at the S&P on March 19th, see where we're at. March 19th is right here where my cursor was at. That also led to some lower price. That was a retest of that prior swing point out there. So then back to where we're at today, even though, and I don't want anybody to be blindsided, what was the one after that? June 22nd. So if I come take a look at June 22nd out here, where's June 22nd? Here's June 22nd. We still ended up seeing lower prices. Not too much more, but we did see lower prices. I guess that's the point that I'm making out here, is that while everybody's at the party, you and I are saying, not so fast. Not so fast. Now, look, this can change by the end of the day. But we've had this bearish crossover for a few days. Something to think about.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back folks, let's continue with the questions here. Make sure we get all these, because if you take the time to write, I want to take the time to answer your question. So HK, Hong Kong, was the ticker symbol out here. That's for Halcon Resources, for Mike K inside the Tiger's Den. And, you know, like when I take a look at this, however I take here, first let's take a look at Stevie's Ninja chart. So I see any bottom out here? I don't. At this stage, I see that it's in a consolidation pattern as we speak right now, trading in between the market profiles at 365. It has a nice day today. It's at 409, but you've got resistance at 421. I say don't touch this thing until you see a close, at least a close above the daily profile out there. That's what I see when I take a look at the daily time frame chart for HK. If I take a look at the weekly time frame chart, well, other than this must be a reverse split or something along those lines out here. What we can see on the weekly time frame is price is just testing the bottom of its weekly profile, which is 410. Now, Mike, to put it together, if you could get it close above 421, and then on a weekly basis it's above 421, then you're back inside the weekly box out here. And then maybe it has the ability to make a run for 521. But at this stage, I don't think I have a bottoming pattern, but I don't know. Let me check. Let me put this on a weekly time frame. You know, weekly is going to trump daily. And I don't think I do. Let me just do the count to the downside out here. Yeah, I only got, we're in wave 6 to the downside. So I do not have a bottoming signal for you in ticker symbol HK out there. That doesn't mean that it didn't bottom. It's just I don't see one. So I hope that helps you out. Let's check in here by email. What do we have? Mike K writes in. No, Michael P. Next stop for Apple. If we take a look at Apple, at $5.37 out here. Yesterday we talked about the confirmed A to B equals CD. One of our listeners wanted to go short Apple, and I convinced him, I believe, to not go short Apple. One, we didn't see any selling from an institutional standpoint because they leave a stamp, and that was not present. And we had a confirmed A to B equals CD. What do we mean confirmed? Here's the conservative one. The A point starts out down here on April 27. That's at 160.63. The B point, which is on June 6, which has volume. I don't have the volume turned on. It would make sense for me to do that for you. So here we'll turn on the volume matrix. And that had shares of 20.1, we'll call it 21 million shares. And that B point was passed, wide price spread, accelerated volume yesterday, 67 million. That gave you that confirmation. Now, look, all A to B equals CD patterns don't complete, but at this stage here, you're asking for what's the next stop. The price projection is 214.18. That is the uno to uno, the one-to-one upside inside of Apple. You've got volume behind that move today as well. All we have to do is put this on basically a 5-minute time frame chart out here, and what we're going to see is we are not going to see institutional desks, somebody who's got the orders, hey, you hit $1 trillion, I want you to lighten up our position. We would see it. They cannot hide. We know what they do. I know what they do. And it's not in place right now. It doesn't mean there's not a little bit of selling going on, but it is nobody unloading a position, so to speak. So we just simply come back to the daily time frame chart. We got to go with the tools that we have. And that says next stop for Apple in the 214 area out there. And with Apple being a large part of the NQs, certainly they can hold things up a bit. So thanks for writing in. Jay writes in and says, hi, Steve. Have a good profit in the triple long Russell 2000 and triple long NASDAQ 100. My feeling is not to hold over the weekend. Do you agree? Positions are from this week. Well, we're a day away from the weekend, so I don't know. But let's go take a look and try to figure out, see if we can help you. By the way, tomorrow I'll be doing the show live from 8 to 9 a.m. I'll be gone all afternoon, but I will be. So if you can't listen in at 8 o'clock, just same way you listen to this show. If you can't listen in, you'll catch the archived version of it, and I'll do my best to make it so that if you're listening at 1 o'clock, there's information that you can go back and take a look at that help you for your Friday trading session. But you've got a good profit in it. So with regard to the Russell 2000 specifically, so the Russell 2000 generated, and this is the bottom panel of the chart out here, it's generated one of those Stevie's Rhodes momentum indicators. So it happens to be the very top panel out here. Let me show it to you like this, and then we'll come back to this chart. So when I take a look at this time frame, 5-hour time frame, by the way, just like we were taking a look at with regard to a couple of those issues already today, you can see how price is moving lower, with less relative energy. Nice bullish engulfing candle out here. Price moves above Stevie's red line. So that was the bottom that came in. This was maybe when you bought back on July 31st out here. Today's August 2nd. Now, you can see that we pulled back this morning, in essence, to test that area, which is typical of the Russell 2000 when it forms these bottoms, or at least it has been typical in the past. Case in point, back here at about 2 o'clock in the afternoon on June 28th, same type of pattern. What does price do? Well, comes back on July the 2nd, and then it's off to the races to the upside. It does the same thing again as I move back here when it made a bottom on April 2nd. Comes back and retests that area 2 days later, April 4th. So you've got that same pattern in play. And by the way, each of those times went up to made a significant move to the upside. So do you have that same thing in place? In fact, the question I had to ask myself later this morning, not early, but around the 11 o'clock time frame, was, geez, is the Russell 2000 giving us the signal of a bottom? So for me, the way to go do that and try to answer that question, Jay, was to go back and take a look at the 5-hour charts for each of the equity futures contracts and say, can I find an instance, now I'm just going back to this calendar year, okay? Can I find an instance where it was the Russell 2000 that was the only 5-hour time frame chart that generated the Rhodes momentum indicator signal? The others didn't, and prices moved higher. If you see the black arrows on my screen, what you will see is instances where the Russell 2000, let me get my cursor out here, where it formed that pattern, but you'll also see you've got that same pattern. In this case here, back at the June 28th level, we had it on all 4 5-hour time frame charts. That's when subscribers and I went long, and we were kind of like, okay, this makes a lot of sense. We're getting these bottom signals across the board, and voila, that turned into a good trade. Right now, the only time frame that I have that pattern on is the Russell 2000. So if I go back to the time before where we made some decent bottoms, well, we have that pattern that was taking place out here in the NQ on April 25th, and then on May 3rd, inside of the ES and the YM, the Russell 2000 the Dow. Didn't take place in the Russell, but again, bottoming signals out here. Then the next time we had the Russell give us that pattern, or the previous time was April 2nd, but we also had those signals coming from the NQ, coming from the ES. Then if I take a look at another bottom out here, this one from March the 4th, we had that signal in the Russell, we had it inside the ES. So I guess the point is, even though this is long-winded, but I just really, so you don't think I'm just pulling stuff out of my you-know-what, I've been found an instance this year where it was the Russell 2000 that made your favorite, my favorite bottoming signal, and the others didn't, and that led prices to the upside out there. So what does that say? Yeah, maybe it suggests that your intuition, your inclination, maybe not to hold it over the weekend, is pretty sound. In other words, I like the way you think. And you know what? Tom always taught us. You can always take that beach ball home. You can come back and you can play another day whenever you want. He wrote to TFNN.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, a little change in game plan out here. Give me a little bit of more sleep. Larry's going to be out tomorrow, so instead of me doing my show at 8 to 9, so that it's archived to happen from 1 to 2, I'll do 9 to 10. Which will be great because we'll be able to take a look at the pre-markets together and then take a look at the first half hour, 25 minutes or so worth of trading out there. So, again, I'll just be filling in for Larry, and then that show will be replayed at the 1 to 2 o'clock time frame. Now, to be thorough and answer Jay's question, here's the other things that you want to consider. Now, specifically, you're inside the NDX 100, the NQ in essence, and the Russell 2000 equity futures contract. That's what I'm going to be looking at. Watch 73.48.38 today. The reason is because we finally got a brand new market profile on a daily basis. Let me turn price off. I know you're going to say if you turn price off, geez, what do I know? Yeah, it's because of this. Whoops, I turned off the profile. I want to turn price off. There we go. You see, brand new profile that formed. We took a look at that with regard to stock, that had just broken through the bottom of its profile. Same kind of thing. So you have a new profile. What this does for you and I and everyone else out here is it tells us this is the battle plan. This tells us where the other side is hanging out. Now, the other side meaning, in this case here, resistance and support. Now, the mere fact that on the NQ it formed above the prior box out there, that is bullish. That's a trending thing to the upside. Okay, so that's good. That's good for your long trade. It's also a bearish structured box. What I mean by that is the center line at 73.12 is much closer to the top of the box, 73.48. At 73.12, sellers are comfortable with price. They believe that's fair value. At 73.48, the snipers are really happy to go ahead and start banging away. And I'm using these as metaphors, okay, not as gun violence stuff out there, but just as an easy way, to describe to you where the sellers are true. So there's sellers in that range of 73.12, 73.48. Right now, they're getting crushed out there. And like in any kind of battle of war out here, when you crush the opposing team, you're going to continue to move higher. But if the NQ today closes below 73.48, Jay, well, that's going to tell you is a strong level of resistance is held. And that might make you say, something to think about. However, nothing more bullish than a failed bearish pattern. So therefore, as we turn price on, if the NQ is able to close above that level today, it says you can go back and test the highs of July 25th. It would mean don't sell your position today necessarily. That's what that says. That's what this chart says. We also want to go and take a look at, well, where's Stevie's red line or green line. And what we may have seen for the day is the actual high. Did I say hello? I did. Hi. Why? Because what price has done so far is just test Stevie's green line. That's an invisible wall of support or resistance, in this case here right now, resistance that most people don't know about. That doesn't include you, because you know about it. Subscribers get to see this information all the time because I go through, I don't know how many, provide them right now with a good 100 or more different instruments that show exactly where the support and resistance levels are, which includes Stevie's red line out there. It's in fact the workshop that we're going to do next Tuesday, which you're invited to. Just go to the homepage of TFNN.com. There's no credit card. There's no nothing. The folks at TFNN have made it so easy for you to join me for this event. Name and an email address. I mean, that's really it out there. And you'll understand better how to take advantage of the tools that I've created that led to that #1 ranking, and because they work. Because you see them here all the time. So come on over, join me for it. At least sign up. You'll be able to catch the archive even if you can't attend live. But, Jay, the NQ, for all intents and purposes, nobody else is probably making this call because they don't have access to Stevie's red line. That may be it today. Maybe kaput. But if, in fact, the NQ closes above Stevie's green line and the top of that daily profile, that says you stay with the trade. You stay with the trade. Why? Because you're probably going to take out the highs and make a seventh wave move to the upside inside of the NQ. That means at least one tick above where the prior high was at from about 5-6 trading sessions ago. At this stage, resistance is held. Now the question is, will the resistance of the top of the box hold? In the case of the Russell 2000, a brand new profile formed today as well. If we go take a look at it, what we're going to see out here is, I don't know, what are we going to see? We're going to see that it was a bullish structured profile. Bullish structured in nature because the center line at 1676 closer to the bottom at 1659. This says that buyers could easily push things up to the 1705 level. Doesn't mean they have to do it today. But 1705 would be the target out here. Well, will it get to 1705? I believe it has a pit stop before it does that. And that number is 1689. Close enough to the 1705 level, but that is where Stevie's green line is. You can see how that oscillator unchanged line has acted as resistance for weeks now. I believe that the Russell 2000 will make an attempt to get up there. Maybe it's today, maybe it's tomorrow. Will it be able to cross that line? I don't know. But if it doesn't, and you're just simply saying, hey, I don't want to hold this over the weekend, watch the 1688 level inside of the Russell 2000. The other thing you should be watching, or I'll be watching it for you, is will the Dow give us some type of signal today? What would that signal be? You can see it's trading right on Stevie's green line. I mean, right on it to the T. Straight at 25,291, it's probably about 25,304, something along those lines. If price closes below that level out here, and I can understand why the Dow equity futures contract found support where it did this morning. The center of its daily profile, bullish, well, it's a bearish structured profile, but 25,110. 25,110 was the price level, even though it got down a few ticks below that, was the level where both buyers and sellers were comfortable with price out here. But if, in fact, the Dow equity futures contract will close below Stevie's green line out here, that suggests, okay, we've got a short-term change in trend in place. So those are the things that I would be looking at. I know somebody's saying, oh, come on, Steve-O, how can you leave out the ES Mini? Don't do that to me. All right, I won't. Well, the ES Mini says, okay, I'm done for the day. Why? Because it's run right into the top of its profile. Now, the actual high for the day is 28.27.25. The actual top of that box, 28.26.75. So what is that? 1 point? Now, if, and I'll be doing the 3 to 3:30, 3 to 4 o'clock show with Tom, so we'll know by 4 o'clock. Now, the futures contract still trades after that, but we'll know whether or not this has been a level of resistance at 28.26. that level of resistance gets taken out, well, then when it says the ES Mini goes and it tags Stevie's red line out here, it's green. It's mean and it's green, and it's right around the 28, 26 area. So watch that with regard to, well, we're at 28, 26. What the heck? 28, what? Oh, man, I got another problem. See, I had this issue today, and I was redoing charts. I'll be a son of a gun. I don't know what's going on with my ES Mini chart out here. It's already right up that level. This says 28.15. 28.15 is not the price out there. This is a bummer, trying to fix problems. Oh, man, what the Sam heck is going on with it? Okay, in any event, so the ES Mini is right up against resistance as we speak right now. I know that was a lot of stuff, and it was thorough. I wanted to give you a thorough reading on the markets. How are we going to summarize this? The ES Mini is up at resistance. The NQ is up at resistance. The Russell 2000, not yet. And the Dow is teetering. It's going to give us a bullish or bearish message by day's end. See Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So no questions or anything that are in the queue. So Let's go take a look at a couple things that are moving out here. We looked at Las Vegas Sands. We started off taking a look at that. Wynn Resorts is trading to the downside. So let's go take a look at it as well, WYNN. And if we look at the three different time frame charts out here, daily, weekly, monthly, we're going to see that it too has price trading below all three time frame market profiles out there. Now, the week hasn't come to an end. The month is just beginning. But we can see that this thing has moved lower. So far, about 4.5 million shares. Last time price was down in this area, it was down with volume of about 6.7 million shares. Still trading below that level and certainly below the last swing point, which was 151.02. However, much like Las Vegas Sands, and I like this chart better than Las Vegas Sands at this stage of the game because, well, I just do. Here's what I'm saying. Right now, prices moving lower, doing less relative energy out there. That alone doesn't say, okay, buy it, that there's a bottom, because price can still move lower with this pattern. But should you see some type of bullish reversal signal out there, that would be an indication that Wynn Resorts, at least on a daily basis, is trying to form a bottom. So come back and take a look at that perhaps tomorrow. Maybe if you remind me, we can take a look in the pre-market or even after the market opens at 9:30, and we'll go look at see what kind of candle session may have begun to form, or the price is going lower and this pattern is still in effect out here. But this stage of the game, it's trying to form a bottom. Today is not that signal, but you know, if you remember, buying low is a fallacy. You want to learn to buy bottoms. Learn to buy bottoms. What you really want to be able to do is understand that Rhodes momentum indicator signal and all the tools that subscribers really get access to. So you'll see my newest black box tool. You'll see that if you're going to attend the workshop, which I'd love you to, and that's going to be next Tuesday. You'll be able to see this tool, for example. Shows you what's going on multiple time frames, daily, weekly, monthly, and this example here for all types of instruments so that you can get great trading ideas as well as manage your longer-term portfolio. Thanks so much for being here, folks. Hey, I'll be back with you at 3 o'clock filling in for Tom today. And don't forget, tomorrow morning, I'll do Larry's show from 9 to 10, which will be replayed from 1 to 2. Take care. Have a great Thursday. We'll see you in a few.